Hey guys, good morning. This is Julie, Jeopardizing Trading Strategies. In this lesson 3, I'm going to talk about the oscillator of the PT2 oscillator and show you how I get the signals to provide an average of the range that price is traded in over a custom time period that I can set myself to show these low, medium, and high ranges during opening range periods. So for instance, between 8:30 in the morning and 8:45 in the morning, I can see on this bottom oscillator that over the last 14 sessions, we've ranged anywhere from 29.25 points, 58.25 points for medium volatility. The 28.25 is low volatility. And on the high volatility, we have 81.50 points. So 81 points, 58, and 29. So that gives me a basis for understanding what to expect in that first 15 minutes of trading. And I can match the chart, so I can change this daily distribution and match that 15-minute distribution on the chart. And now I can clearly see when price is breaking out of that range or when price is inside of it. And if price is inside your opening range, you're not going to go very far, right? You're just going to go up and down inside the range. Ideally, you want to wait for an opportunity of when price breaks out. And there are various methods for trading with these range breakouts. You can trade 1 or 2 times the size of the range, or you can try to trade an ATR, or just to a target. Like right here, it went to the Globex, or here was the Globex, it just went up. But I have put tails on my ranges, so I can set Fibonacci levels however I want to set them up. I like to set them up so I can hit the line pretty regularly. So if I want to trade tail 1 or tail 2, I can throw a line up there and give me an opportunity to try to hit it. But taking the tails back off for a second so that we can see this more clearly, the concept of having the information on the market analyzer per time period, so I can tell what an average 5-minute range is, 15, 10, 30, 1 hour, that first 1 hour initial balance that a lot of the volume profile traders are tied to, as well as what the RTH session and the daily session, they're different ranges, versus the Globex. So this gives me a complete, microscopic view of what probabilities are for statistics, of what to expect a range, given volatility considerations. So if I know that my volatility, for instance, is high, medium, or low, and I can do the very fancy eyeball test, right? And try to pick out where the low volatility breakouts occur. So like anything above here would be a breakout. Or even take it in further. And just mark some areas on the chart and look for, price action at these levels to see if it's going to continue breaking for that further range expansion, because it's, breaking higher. This is where we want to take the trades, right? I'm sorry. But so yes, I think having the ability to just visualize where our ranges are, match it to our time frame that we like to trade, 5 minute, 15 minute, 30 minute, 60 minutes, Globex. I mean, you can slice and dice the data numerous ways, but just knowing that over the last 5 periods, 10 periods, 14 periods, 20 periods, however you like to, set it up, what that range has been, then that can help you make decisions based on the current volatility. And one thing, again, to keep in mind with this range, if you're breaking out on a deceleration of volatility, meaning the range is contracting, it is not accelerating. So here's your deceleration. That will give you those low drift longs. And you may have a strategy for trading low drift longs that is different than your strategy for trading high range expansion longs. So you can trade the current volatility and change your, strategy accordingly. I think, again, here's a good example. Finding these high range expansion breakouts is like the cream of the cream, right? Cream of the crop. You clearly can see that you are in a just hyperbolic range expansion. And then you can determine, once your ranges are breaking, to throw some position size on that, jump in there and try to make, I'm not trying to say you should go the entire range. If you'd like to do that, that's fine. But just for short-term pattern day trading, get used to where these patterns are and then try to jump inside of it and grab either like a one range off of it. You can see how price got up to that one range and pulled back and then broke out again. Or you can put the tails on that I've given you for the range breaks. So when we have range breaks, now we can put whatever Fibonacci levels we like. You can see I even broke through the last Fibonacci level on this one. And you can use these as levels to trade to. And these are totally customizable. You can put whatever Fibonacci level you like. I'm just using the statistical levels. Trying to, like I said, hit the side of a barn is my goal, right? Close is close enough in horseshoes and trading, as I say, right? So jump in, try to grab your, goal, and or if you're swing trading or position trading, you may even want to try to come in and position at the bottom end of the range, right? If you're going long, or sell the top end, sell high, buy low. So here are the 15-minute ranges with tails, and you can also put another instance of you can nest your ranges like I do. I'll put a daily on top of it, I already have a daily. No, I guess not. Add another one. So here's your daily. And then you can see how the range interacts. Here was your 15-minute tail at your daily PT3 reversal. And you can see price, the range was decelerating, which usually implies that low drift long, right? Off your daily PT3, which means your end of the daily range. And I think the algos hit that yesterday as well. Yep, right here. It got a little bit below it. But the market makers came in on that deceleration and pushed it back up. And fortunately, today, the bears are still prowling because this is flat. It never popped back up to the upper PT1. We're hanging below the Globex. This pink line is the opening range indicator. So I'm mixing indicators. I have an opening range indicator that allows me to look at that Globex open. So if I remove that, this is the PT indicator only that you're seeing. But you can do like I do and add other indicators to your chart to help you make these trading decisions. Here's the mid band of the Globex. Kind of hard to see. I've got it very light, but just change this back to the regular Globex open, the pink. And this Globex open will often act as support resistance. So if you're trading below the Globex, you generally, as a general rule of thumb, would like to be looking for shorts. And if you're above it, you would like to be looking for long opportunities. That doesn't mean that you always get them. Nothing in trading is absolute. But we can lean on our statistics as far as where we are inside these ranges and understand the significance of the level. These are statistically significant levels on this indicator, and as such, it is very, very apparent that other banks and hedge funds use these same levels. So, which makes it good for us because we've tapped into their levels. But just having an idea, let me take the daily back off. Again, of this 15-minute range concept. Of knowing whether you broke below the 15-minute range, we broke below our tails, and then it came back and tested the bottom tail and took back off. I mean, this is really central to our understanding, or my understanding of where price can likely go. And look, it went to the bottom tail from the prior day and flipped over. And this is just using, again, statistical levels and a 15-minute range. We can do the same thing for 1 hour range. Let me change this to the 1 hour and put it on a 60-minute bar. And let me change my bottom oscillator. Okay. And so here you can see 166, 119, and 59.50, 59.50, 119.25, and 166.50. So I have low, medium, and high volatility. You can see our range is decelerating right now. Price is melting up. And we're coming off of our 60-minute tails from the 60-minute opening range breakout. And so that 60-minute opening range went down to the tail, right? Do you see that? I mean, um, the one is very instrumental, and the equity indexes love to sit inside this PT1, representing 68% of the range. And this is fractal. It works on a daily just as it does on a 1 hour initial balance or a 15-minute range, and you can use this same breakout concept that it's not really going to go anywhere until it breaks the one up or down. So you really have to sort of wait for it to break that one and then trade to your target on whatever time frame you're trading. And that's why I call it 1, 2, 3. I'm going from the 1, I want to go to the 2, and want to go to the 3. And now I can even go to my extensions and know where I am using historic volatility to guide me, knowing that if I'm above, the top volatility level and climbing, that my range is expanding and I'm going to have to widen my stops and profit targets if I'm going to be successful inside that. I can even stop trading if it gets to be a certain level above where I'm comfortable, where it gets real expensive, to be inside a range that is that high, like all of this right here. I mean, we went from 654 to 911. And to give you some context, that's 257 points or $5,140 for 1 hour just to find out if you're right or wrong on direction. That's expensive. So you can turn the algo off. What I like, if it gets above your uncle point, I don't want to trade that high of volatility. Keep me in a medium volatility range, and you can set your algo to trade inside your volatility channel, low, medium, or high, and then know what that behavior does in a similar pattern when it breaks out of a 1 hour IB range for the equity indexes, because that's really when we have the opportunity to go to the 2 and the 3 on the 1 hour IB as well as the daily. Let me put the daily back up. And then you can start layering your ranges on your chart. I also add a different one. I put a Globex on there also, and so I can see the progression of it breaking the Globex, then the 1 hour IB, then the PT1 as it leads, down to the targets. And that's, what you want to see. And then you can, like I said, decide to just sit on your hands if you're inside the box, or go find a market that is outside the box. So if you're inside the box, you're just getting the overlap up and down. You want to wait for it to go out to your targets. And so we can, understand just using, these ranges to guesstimate where we are and where price might be heading based on actual, real volatility, not fake volatility, not implied volatility, but real volatility. What is it really, really, really doing compared to its historical averages? And I think, that's a pretty good method of giving us a solid understanding of what the current state of the market actually is. No guessing. I mean, it's right here. So, and then if we would have the fortitude and the patience to actually trade our signals as they occur, using whatever time frame we like trading. I think a 60-minute can be a good basis chart, but I like to trade. You can trade a 15-minute chart inside of a 60-minute range. I think that's a pretty good one to trade. Or a 5-minute chart inside of a 15-minute range, or you know what I'm saying. You can mix your ranges up using that custom time frame of the highest drive after the RTH open. Or you can get granular and say, I want to trade that 15-minute range between 10:15 a.m. and 10:30 a.m. and see what that looks like. You can set any range you want. So if you like a specific time frame, you can set a range to trade it. And the distributions are all the same. So this can be customized granularly just by time period. So this would make all the GAN traders really happy. But I just like sticking to the highest time frame that I'm in, the highest drive time for the opening range, simple opening range concept that so many traders use. And then just using, like I said, these statistical levels to trade in and out of the ranges. The 60-minute range, just on a 24/7, if you'd like to see what that looks like instead of using a time series, you can use like a daily or minute bar. You can put a 60-minute range on here, and let me show you. This makes some really good breakouts. Let me put this on a 1-minute chart. And again, same concept. If it's inside the ones, it's just, that general inside the VWAP or inside your volume profile value area, not really going anywhere. It's when it gets outside of that and starts breaking ranges that you want to really start exactly paying attention to, like right here. Big breakout. Big breakout. And so breakout or reversal places on the 60-minute ranges. Come back and look at these breakouts. So this makes it super, super easy, right? To identify periods of just trading 60-minute breakouts could be something that you would want to consider. You can also change it to 100 instead of just 60. I mean, you can make any custom distribution you would like to have. 100 is also a very popular distribution to trade. For many obvious reasons. If you're a programmer, you understand that. So just understanding, how algorithms work and using math to let you know where you are and where price may be trying to go. If it leaves the one, it's going to try to get to the 2. If it leaves a 2, it's going to try to get to the 3 and maybe the extensions. The ideal time is to go with range expansion in a directional trade, but in the equity indexes, it will drift up on this deceleration as well. And if you know how to identify that deceleration, like I said, you can, create a plan to address that as well. If that plan is, trading it or just sitting on your hands, waiting for a more, you know, directional breakout opportunity. It went from the lower 1 past the Globex, the 1 and the 2 on upward slope, and then it crashed all the way back through the range. Again, this is that custom 100 bar range, so it's not a daily or anything like that. Let me change it to the 1 hour IB. So you can take the smallest of ranges and then apply it to your larger range for context. And you may just, elect to stay within the range that most of the banks and hedge funds trade in, and that's why I have the 1 hour IB highlighted in blue, so I can always see that I've got 59 points, 119 or 166 on that low, medium, high volatility opportunity, and try and wait for price to break above or below the 1 and try to go for a directional trade in that direction at that time. Or, get an inflection off of another level that you have identified using other methodology with your other indicators. I like my linear regression indicator with this system because it allows me to see the offsets, ATR offsets from the main linear regression trend line. And so when the rubber band stretches so far from the main trend line, it usually signals a reversal back to the trend. Or a breakout. There was a reversal, a good reversal. But you can set these also, customize your levels, your offsets, 2, 4, 6, 8, or 1, 2, 3, 4, or 1, 1, 2, 1, 3, 1, whatever you would like. And try and see if you can find your channels lining up to show you those excursions from the main trend. Usually only, can go so far, and then the algos will kick in and reverse it, like right here. Reverse or break, right? And that was a clear breakout. Look, a breakout, and came back and tested the channel, and then back down below the PT3. And that's your 1 hour IB PT3. So this is the 1 hour IB PT3, and your linear regression breakout with rising volatility, I mean that's like you shouldn't have an invitation to trade to your lower targets, and put the daily back up and trade to that. Go back and find that place. And here was another example where it got below the linear regression, walked lower, but then your deceleration started coming in, signaling that that down move was over. It's very hard to short deceleration in your overbought, oversold area. There we go. Came down to the PT2, bounced back up to the fib, next fib, and then the PT3. This is pretty good. And then even lower, trying to get down to that last fib. Bounced on the prior day PT2. But this second part right here, let me show you real quick. See this deceleration on these shorts? Decelerate, short, 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 this last leg. This is very hard for me to trade because of the deceleration. I don't like that at all. I probably would have sat out and then tried to get back in over here and got chopped up. But we're already, yeah. Anyway, I find it very difficult to short vol, but maybe you don't have a problem with it. Anyway, linear regression, opening range, and distribution set also for opening range breakouts or range breakouts by time period. All of these tools are just to aid us on where price is, what the current volatility is, whether the volatility is expanding or contracting, what our range opportunities are. Doesn't mean that it's going to make the 1, 2, 3, but this is where you just lean on probability and statistics and to get you to the promised land. And that's what this is all about, right? All right. Thank you so much. Have a good day.